The US government turned heads with its plan to invest a hefty $250 million in developing the Lobito Atlantic Railway Corridor. This isn't just any railway, it's a crucial link connecting the rich copper and cobalt belts in the Democratic Republic of Congo and Zambia with Angola's port of Lobito. What makes this move particularly intriguing? The area is already a hotspot for Chinese companies. Congo is a global cobalt powerhouse, providing over 70% of the world's supply, mostly exported to China. Right next door, Zambia, rich in high-grade copper deposits, has seen substantial Chinese investments. But there is a third player, the EU. The Europeans, to rival China's mammoth trillion-dollar Belt and Road Initiative, are mobilizing $318 billion over the next 5 years for infrastructure development in developing countries. But China isn't stepping back. At the recent Belt and Road Forum, China announced investments in the second phase of their Kamoa copper and cobalt mine in Congo and the Kururi potash mine project in Eritrea, with potash salt becoming a crucial component for lithium metal batteries. So there is a clear winner: Africa. But it's not just the US government. Silicon Valley is entering the scene. With backing from Bill Gates, Jeff Bezos, and OpenAI CEO Sam Altman, the California-based Cobalt Metals is trying to use artificial intelligence to mine for valuable metals such as cobalt, copper, nickel, and lithium used in the production of batteries for a variety of sectors, including electric vehicles. The startup has built a database about the Earth's layers and uses algorithms to make predictions about where mineral deposits are around the world. It has already pumped $150 million into its Zambia project. Drills are turning 24/7 as they try to prove early indications that they could be sitting on one of the biggest and richest copper deposits in the world. If their suspicions are ultimately proven correct, this could end up being a major new copper mine. More than a kilometer below lies enough copper in a highly concentrated form to power over 100 million electric vehicles. And now let's turn to the EU. They also signed another deal, this time with Namibia on raw materials, value chains, and renewable hydrogen, supported by €1 billion in investments. The EU will also support a study for the development of the port of Walvis Bay, halfway down the Namibian coastline, into an industrial and logistics hub for the region. The US sees a chance to challenge China's grip on the key African trade corridor. The US and EU are working on building and developing new supply chains and routes to serve their markets. One of the biggest challenges that American and European countries face in the coming decades as we tackle the energy transition is where they're going to source all the metals that are needed to fuel it. The commodities coming out of countries such as Zambia and neighboring Democratic Republic of Congo, which includes cobalt and copper, have made these countries important destinations for investment. Many of the mines in this part of the world, especially in the Democratic Republic of Congo, are already owned and operated by Chinese companies. The US and EU goal would have to be a supply chain with less Chinese imprint or influence on it, but the Lobito Corridor would only make sense if they first find cobalt and copper suppliers in the DRC and Zambia. Since the Democratic Republic of Congo is refining copper, currently listed as a critical mineral by the EU and the US, the Lobito Corridor would be useful to deliver supplies directly to Europe. That usefulness would increase significantly if Congo developed a robust cobalt processing industry, as Europe does not have this capacity. Hence, the funding of the corridor can be seen as a global approach from the EU and the US to create and develop their own alternative supply chain of critical minerals out of that region. In the meanwhile, China has spent upwards of $1 trillion over the past decade on projects at least partly intended to secure the supply of elements that will underpin the upcoming technology, energy, and transport revolutions. In fact, the US lost its last major foothold here in 2020 when the Arizona-based firm Freeport-McMoRan sold the project in Congo to a Chinese competitor. Angola has taken out tens of billions of dollars of debt from China, part of which they are repaying with deliveries of oil from what is one of Africa's biggest crude producers. All that Chinese investment was a precursor to Beijing's so-called Belt and Road Initiative, a massively ambitious global infrastructure investment program that China started in 2013. 52 American governments have signed memorandums of understanding with the Chinese government on the Belt and Road Initiative. The World Bank hadn't until recently financed a new railway project on the African continent since 2002. That's a major gap for African countries. So who could they look to? Africa looked to China, who did have expertise and also financing available on railways. Over the last 20 years, African governments have taken loans from China of around the value of $160 billion. That was well all and good when the Chinese economy was booming. China could afford to fund projects like this a lot more easily. The slowdown in China's economy has resulted in a slowdown in lending to African economies. That implies they're more selective in regards to the countries that they're lending to, particularly those that are highly indebted. The G7's response to Belt and Road is a pledge to invest $600 billion in middle and low-income countries over 5 years. Since the 2022 US-Africa Summit, we have seen the pace of engagement from the US into African countries increase. We've seen more US leaders visit the African continent. We've seen many of the programs which were existing prior to the summit scale up their activity. Countries like Zambia and Angola realize they stand to benefit from the competition if they play their cards right. China's dominance in both the mining and transport sectors in the region means that the West is playing catch-up. So the Lobito Corridor provides a substantive stake for the West. Fundamentally, this is about a race to lead the transition to net zero and the new economy will engender. Access to these minerals will determine winning and losing, and in this context, it goes beyond simply opposition to the Belt and Road Initiative. The EU's dependence on China for inputs such as solar panels or batteries further highlights Europe's vulnerability in the energy transition. To avoid supply chain disruptions, whether due to external shocks as we saw during the COVID-19 pandemic or due to the weaponization of the EU's dependence as we learned in the case of Russia, the EU is actively investing in developing countries, including in Africa, to secure access to critical raw materials. China's early and comprehensive involvement in Africa had enabled it to not only secure critical minerals, but also establish economic and political influence through trade agreements, investments, and infrastructure development. This strategic advantage puts the United States at risk of continued dependency on China as an intermediary in the critical mineral supply chain. The Lobito Corridor could play a pivotal role in providing a more direct route for mineral transportation from the Democratic Republic of Congo to the Angolan coast, reducing reliance on what is perceived as Chinese-controlled routes. But the US and EU must be careful. These initiatives to counter China's Belt and Road Initiative could ignore the African desire to move away from just commodity exporters countries.